On today's episode of Shifting Energy, we'll tell you about what's known as the fourth industrial revolution and how it's reshaping global energy markets. It's also driving demand for critical materials buried deep underneath the Earth's surface. We'll reveal the identity of these materials along with the ETFs tracking them. Stay with us. I'm Thalia Hayden with ETF Guide. It's great to have you with us. Welcome to Shifting Energy, an original episode series that keeps you on top of big changes in the global energy transition. Throughout history, the world has gone through industrial revolutions, right? And now we're in the midst of what some economists are calling a fourth industrial revolution. So what is it, and how is it different from previous industrial revolutions? And what are the investment opportunities behind it? Helping us get to the bottom of all this is Steve Schoffstall, Director of ETF Product Management at Sprott Asset Management. Steve, welcome to the program. It's great to see you again.
Yeah, great to be back. Thank you.
All right, so today we're talking industrial revolutions, which have been a part of mankind's quest for prosperity and progress. We've seen this in fields like agriculture, communication, and transportation, and right now we're in the midst of what some are calling a fourth industrial revolution. So what is it, and how is it different from previous industrial revolutions?
Yeah, I mean, all industrial revolutions have one thing at their core, and we hope that's advancement of society, and this, in that sense, is no different. When you look at past industrial revolutions, it really brought us from that more rural and agrarian society and into an urbanization setting, and they were really focused on productivity and increasing economic output. And basically, what that led to was large changes across societies, and gave us a much more complex economic model as we had a period of globalization, particularly over the last 50 or so years. The fourth industrial revolution started about 20 years ago, and it's really focused and benefiting from acceleration in technology. And as that relates to things like AI, robotics, quantum computing, and then how they're integrating into the overall economy. And what we're really seeing is that's really starting to reshape the energy systems that we have globally. And it's really all about electricity production and technological innovation and how those two come together.
Well, you kind of touched on this, but sticking with it, what impacts may the fourth industrial revolution have on electricity and infrastructure?
So the first part is really about renewable energy. So if you look at the start of the century, we had about 18% or so of our electricity came from renewable energy sources. The vast majority of that, upwards of 90 to 95%, came from hydroelectric. As we've gone through the last 25 or so years, we've really started to see things like wind and solar get much more prevalent. So when we got to the end of 2023, what we saw was that renewable energy mix now was closer to 30%. And when we start looking at the International Energy Agency's estimates where we expect renewable energy to fit in, just going out through 2028, their estimates have it at about 42% of the grid. So a very sizable change that we're seeing that's been happening now for the last 20 or 25 years or so. And because this renewable energy is starting to come front and center, it's really contingent on factors that are outside of our control. So if you think of wind and solar, they're very much impacted by environmental factors. And what this means is that we have to have a reliable baseload power, preferably one that's clean, that can back up these systems. And so what we're starting to see now, both from public and private entities, is a new reliance and more optimism around nuclear energy. So we've come a long way in the nuclear space than where we were just 2 or 3 years ago, when we were just really starting to see an uptick in nuclear energy production. So if we look at what this looks like from an energy system perspective and how renewable energy fits into that, one of the things we expect to see happen is that we'll start to see leaving this centralized large power plant model and moving more towards a decentralized system. And so basically what I mean by that is that we could expect to see much smaller renewable energy sources start to be built much closer to where the end use is going to be. And with that, that also starts to bring new opportunity, particularly as it relates to grid battery storage. And we start to think about lithium ion batteries and how they can store energy that's generated that maybe solar farms are generating more energy than is being used during the day. at nighttime, these battery storage systems can then release that energy to the grid when the sun's not shining and we need more capacity. Another thing that I think people don't necessarily think of when they think of electricity production is actually the technology that goes behind that. So we're seeing an increase in smart grids, particularly as they start to rely on AI and basically what that can mean for electricity generation and transmission. So with the emergence of AI, we can see models now that are able to manage that energy flow more efficiently than in the past. And we can see production and distribution start to get enhanced and more effectively managed throughout the energy supply chain.
Well, that makes sense. And we do know Sprott has become a leader in the critical materials space over the last several years. Which critical materials are you most focused on now?
I'd say the two that we most hear about and are also a focus of ours are copper and uranium. And when we really look at those two, not only do they look to have significant roles in this fourth industrial revolution, but also there's a lot of similarities between the two. So we're impacted by a decrease in mining investment that we saw through the 2010s. Both metals are expected to have significant supply shortages going out through 2040. And there's a number of different reasons for that, but most of it is around increasing demand and difficulties in bringing new production online. And we expect both to play a very important role in the rise of artificial intelligence and the energy transition. So if we were to look at copper for just a moment here, there really is a structural demand that's driving prices much higher than what we've seen. Copper tends to be viewed as a barometer for the overall economic growth of the global economy and has a lot of relevance for people following the Chinese economy. But if you look at the way that prices have trended since the beginning of the century, back in 2000 when China was going through their industrialization throughout the economy, we saw prices around $2,000 per ton. Today, we're up around $8,600 per ton. And what this is doing is incentivizing miners to start investing back into their businesses, making their operations much more profitable. The transition to cleaner energy is also very resource intense. And so if you look at what we're expecting to see from a copper demand perspective, from about 2022 out through 2050, based on where demand projections are at, we're expecting the demand for copper to be about 2 times the amount of copper that has been mined all throughout human history. And so if we take a look at what's driving that, it really is this increase in not only renewable energy, but also AI and other data centers. But if we look at EVs and renewable energy just for a moment, about 2.4 times the amount of copper is needed in an EV relative to a gas-powered car. And when we start looking at electricity generation, you start thinking solar and wind, you see it's about 2.5 times the amount of copper is needed in those types of energy plants relative to a fossil fuel powered plant. And then when we start looking at the AI side of the equation, copper is used to wire all of these computers and servers together. And given its properties, we're actually seeing an increasing reliance on copper as opposed to other ways of transmitting electricity and data, such as fiber optics. And one of the reasons we're seeing that is it's much easier and much more cost effective and a lot less energy intensive for the firms that are running these data centers to actually cool the systems down if they're using copper. So it does have that added benefit as it relates to the data centers. And then finally, when we start looking at the supply side, we're starting to have some issues that are very structural and starting to catch up to us there. If you look at the amount of time it takes to get a new copper mine up and running, the industry is very much notorious for it being a long lead time, and it's not because of what the miners are doing solely. It could take about 16 and a half years to get a new mine from discovery to production. And along the way, what we've seen is, over the last 20 years or so, a lot of the easy material has been mined out. So what that means is that the existing mines aren't yielding to the same degree as they were previously. So miners are having to dig deeper or go further and further away from the infrastructure that's already in place. And so that's something that's really driving the overall copper from a supply perspective. And just one quick minute on uranium while we're on the topic is, that's a spot that we've seen a lot of increased acceptance in nuclear power over the last 3 or 4 years. It's safe, it's reliable and clean. And because of this, we saw just last December that over 20 nations signed on at the COP28 conference to actually triple their nuclear energy capacity out through 2050. And after that agreement was signed, the UK came out and actually said that they're going to quadruple their nuclear energy capacity. And a lot of times in America, I think one of the things that we hear a lot is, well, we don't see a lot of new power plants being built here. A lot of what we see in the growth from nuclear energy is overseas. If you look at the 440 nuclear power plants that we have up and running globally, the United States has the most in terms of power generation. But we do see another 152 that are actually already under construction or planned for construction. And a lot of that is coming through from China, and restarts that we're seeing in Japan is actually a story that we see developing where power plants that already exist are extending their life, or they're moving away from plans to shut down those plants because they do see that as a reliable, clean energy alternative to some of the other less reliable sources like wind and solar out there. And just another aspect that we're starting to see is, as it relates to these data centers and AI, nuclear energy is increasingly being turned to. There's a great example here in Pennsylvania, where I'm from, where Amazon actually purchased a data center right adjacent to a nuclear power plant so that they could get nuclear power directly into the data center because their energy needs are that high. This isn't just something that's specific to Amazon or this one location. We do see a lot of these data centers that are being built by firms like Microsoft and Meta and Amazon are looking for ways to bring renewables and even nuclear energy into their whole operation to supply that clean power. And that's because these firms usually do have a clean energy mandate. And that's nuclear power is one way that they're able to achieve that mandate. And then finally, on the supply side, as it relates to uranium, it's a very similar story that we see with copper, where we don't expect to see any large projects that would fully satisfy the demand going out through 2040 is where most projections take us to. And if you were to look at cumulative deficit out through 2040, depending on your assumptions, the expectation is that we'll have a deficit of about 1 billion pounds up to 2.1 billion pounds. So very significant hurdle to overcome as we move forward in this next iteration of our revolution.
Sounds like it. Got it. Final question before we let you go, Steve. Sprott offers 7 ETFs with focused exposure to critical materials. Can you tell us how they work?
Yeah, so they're quite straightforward. So our background at Sprott is really in the metals and mining space, where we have several decades of experience. And what we do when we go through the product development process is we really take a look at the investment landscape. And first, we try to identify emerging trends, and then second, we look for gaps of what's already available to investors. And when we do that, we're able to basically identify pure play strategies. So these are going to be strategies where we're targeting firms that have at least 50% of their revenue or assets that are devoted to whichever commodity we target. So if you look at uranium, for example, the pure play strategy would say that they have to have at least 50% of their revenue or assets tied to the mining or production of uranium. So that, in a nutshell, is really what we're looking to do. And what that does is it actually reduces that unwanted commodity exposure that you might get from investing in a diversified miner. And we offer several different alternatives for investors that are interested in the critical materials space. The first option would be the Sprott Energy Transition Materials ETF, ticker SETM. This is a broad-based strategy designed for investors that might understand the investment possibilities and understand their growth story, but don't necessarily want to allocate to one metal over the other. This is a pure play strategy that invests in 9 different critical materials. We also have more targeted approaches, 2 based on uranium. So we have the Sprott Uranium Miners ETF, ticker URNM, and the Sprott Junior Uranium Miners ETF, ticker URNJ. So URNJ is going to invest in small cap miners, while the URNM is going to invest in all cap miners, and also have about a 17 to 18% allocation of physical uranium. On the copper space, we have 2 ETFs there available as well. Ticker COPP is the Sprott Copper Miners ETF, and then the Sprott Junior Copper Miners ETF, ticker COPJ. And then rounding out our offering for the single commodities would be the Sprott Nickel Miners ETF, ticker NIKL, and the Sprott Lithium Miners ETF, ticker LITP.
All right, Steve, thank you so much for your timely insights and keeping us updated on what we need to know now. Keep up the great work.
Thanks for having me.
To learn more about the critical materials and ETFs we discussed on today's program, be sure to visit SprottETFs.com. I'm Thalia Hayden with ETF Guide. Thanks for watching, and we'll see you next time.